I'm Keith McCullough, and welcome to another Real Conversation. We've had Hedgeye for 17 years. HedgeyeTV is not a new thing, but this is the first time, there's always a first, where I get to have a real conversation with my partner, Josh Steiner, with a standing U.S. congressman in Congressman Schweikert. And this is, I think that's the first time, Congressman, because you're one of the very few people that will actually stand up and talk about this debt bond that we have and the big elephant in the room and speak about it specifically, critically. We sincerely appreciate that. We're analysts, to be clear, we're not journalists, which is a pretty big difference, financial analysts and economists in particular. So we quite look forward to jumping into some of the data. As you speak, we'll have some pictures so people can see the actual
Keith,
debt and the numbers. But welcome.
Keith, when you call yourself an analyst, does that mean you guys actually can do math?
Yeah. Well, you know, we do a little math over here. That's right.
It is some of the craziest conversations I have with some of the reporters, and you walk them through, and then they just stare at you like, I became a journalist because there was no math.
Well, we do find a correlation, an inverse correlation between the narratives that MSM journalists have and the actual math. Now, you don't want to be, sometimes it's just the opposite, which is great. But welcome. I'll start with a picture, you know, the new boss, if you will, in Scott Bessent. But beside him, we show the debt bomb. So again, you can show that, Eric, on the slide that says the new boss, Scott Bessent. Currently, as you would well know, Congressman, you have pretty damn close to, you know, and we're on the right side, we're showing debt to GDP, for those of you that don't know what that is, and the CBO projections. I mean, it's one thing to go towards 100, it's another thing to go from here towards 171.7. Now, what do you think about that just in terms of absolutes? Do you think that there's anything to stop this imminently or over the intermediate to long term?
You caught me on a bad day. I'm a bit dour right now. I've almost come to the conclusion that the army of folks who are outside my door right now, who basically are demanding free stuff. They want a subsidy here. They want a barrier to entry. They don't want to modernize how they deliver services. It's really hard to do, and small incremental improvements of just modernizing delivery of social entitlement services, not a cut, modernizing, are absolute war, because those inefficiencies are so many business organizations' profit margin. And look, your economists would get that. And at some point, I want to make a point. I want to do some quick speed math with you at some point here to give you an idea, just in the next 10-year window, why I'm so dour.
Well, go for it. I mean, if we look at it for what it is, I mean, I don't know where you want to start. I mean, we can start with the history of it in terms of what got us here.
No, let's actually just do some running math. And we can, it's simple math. We can do this in our head. Baseline CBO, and I think they underestimate interest rates and overestimate economic growth, but CBO gets to be CBO. 22 trillion of borrowing over the next 10 years. The tax cut extensions, the reconciliation budget we just passed, which we have lots of promises, and now a number of our leadership are walking away from those promises, will add 3 trillion on top of that. If you add in some of the other promises from the president, no tax on tips, no tax on Social Security, tax on overtime, just even a fraction of those things, you get another 3 trillion of borrowing, because our inability to do offsets. Remember, the reconciliation budget for $4.5 trillion authorization, there's really only 1.2 trillion of spending reduction. So you add those together, and think about this. On the day of the election, publicly held debt of U.S. sovereigns was what, 28 trillion? Mm-hmm. That 10-year number of publicly held debt, because in 2033, the U.S., Social Security Trust Fund is empty. So that internal borrowing now has to be public borrowing. It has to go out to the market and be sold, we may take the next 10 years and the amount of publicly sold debt will equal where we were last November that took 240 years to get to. 240 years of debt, and we're going to double it in 10. That's the scale of the curve we're looking at. And yet you will hear absolutely insane conversations here on the congressional campus. We should just use baseline, which let's just pretend if we're spending it, we can just keep spending it, but we won't allow CBO to actually use baseline for the debt. We're going to have them use current law for the debt calculations. So be careful. The fraud is baked in. Do what's easy on the spending side and then lie about the debt projections.
Well, I think you've called it, actually, without mincing words, you've called what Bessent said intellectual fraud?
Oh, yeah. And that was when I was being nice.
Mm-hmm. I mean, the math's the math. I mean, back to that chart, guys. I mean, if you show, this is to Congressman Schweikert's point, this is assuming CBO projections, which have been off on orders of trillions of dollars for many, many years. Josh Steiner probably is going to chime in on that.
But and see if Josh's head is where mine is. I think the numbers are actually much worse.
Way worse.
I don't think we have enough understanding either, because there's no free option anymore. If interest rates move against us, we're going to refinance what, 9-10 trillion just this year, let alone probably 2-3 in virgin sales. But if interest rates don't move against us, it's because the economy
is slowing,
it's stagnating, and then tax receipts are falling. I mean, Josh, am I being too grumpy?
No, actually, I think you're spot on with where you should be. I wish more people shared your frustration. We've got a chart that goes and looks back sort of over the longer history. And from 1962 until 2007, if we looked at debt to GDP in this country, it ranged really between around 23% at the low end and just under 50% at the high end. And interestingly, that was a period where, during that, long multi-decade stretch, you had 7 Republican administrations, you had 5 Democrat administrations, and in spite of it all, we were able to more or less keep the ship, going in the right direction, beginning in 2008, and really running up until this past year. That debt to GDP number has, to put it mildly, exploded from 35 or so percent now to just around 100%. And as Keith brought up, just looking out over the next decade, over the next even 30 years out, the CBO goes, the numbers really just become obviously unsustainable. And just to make it a little bit more maybe tangible, I went back and pulled the CBO projections, even just over the last 15 years. I pulled a set from 2012, and obviously we were coming out of the financial crisis. The years 2014 through 2022, back in 2012, the projection, and we could debate how accurate these would have been or not, but what was in the law at the time, the expectation was it was going to produce annual deficits really between 1% and 2%. You fast forward to 2019, and I pulled those numbers, and this is before COVID. And the projections at that point, from 2019 through 2028, were for annual deficits really in the low to mid 4% range annually. I pulled the January 2025 numbers from CBO just before this call, and this is assuming TCJA expires, beginning with 2027 or 2026 and going out through 2035. You have numbers really ranging in the low 5s up into the sort of low to mid 6s annually. And so I guess, and those are,
and I will argue the real number is 7 to 7.5.
That you're exactly right. And I've gone back and looked at the sort of, kind of Bayesian mistakes the CBO makes over long periods of time, and they chronically underestimate what those numbers end up being by about exactly the numbers you just put out. And so I guess bigger question here is just, what's brought us to this juncture? Maybe you could give historical perspective, go through
Josh?
the decades, like when did this start? Why has Washington been on this slippery slope? Why can't we fix this?
Josh, right?
Yes.
Okay, let's play a game here. What was really happening around 2008 demographically? Baby boomers, some of the first big quartiles of baby boomers had started to become 65. We still have about 3 more years, and what baby boom population is what about 60 million, 67 million. It's the way I view the world, and I may be a heretic here, it's demographics. We have this remarkable shortage that almost no one talks about of young people. The entire industrialized world has a shortage of young people. And I'm a baby boomer. We're moving into our earned benefits. At the same time, that consumption and the way the federal government has distorted healthcare costs, because God forbid we actually allow technology into health to lower the price of healthcare, because that would require competition. I can demonstrate that at least in the next 10-year window, not 100%, but most of the debt growth, that baseline 22 trillion of borrowing over the next 10 years, is interest and healthcare. And when you get even further out, it's almost 100% interest, healthcare, and then in 8 years, when the Social Security Trust Fund is emptied. And a full year of the emptied trust fund is about $600 billion. These numbers are stunningly ugly. And yet the debate we will have here on Capitol Hill is, people want their tax extensions? Great, they should have them. Help us find a way to pay for it. President Trump has made these promises. Great, let's do it. Find a way to pay for it. And I get the crap kicked out of me around here for even the concept that maybe some modernization, some set aside, stopping duplicative services, those things, because it turns out there's an army of lobbyists that those misalignments is a business model. I mean, you tell me, do you agree with my demographic theory?
Yeah, 100%. We actually have a person who works with us named Neil Howe, who's written some really good longer-term demographic. He's sort of the Wayne Gretzky of demography.
No, he's brilliant.
Yeah, so we're super familiar with that, and couldn't agree more. That is the underlying root challenge. But
So
yeah,
if I came to you and said, okay, who's some of his books are bestsellers, but I came to you and said, okay, no country has been able to change fertility rates or natalist policies or whatever pop term you want to use. It's not happened. We can see the South Koreas, the Taiwans, this, that, okay, collapse coming. Are we as a society ready to adopt policy that will maximize productivity, move to a talent-based immigration system instead of the familial immigration system we have today? The two great extraordinary privileges of the United States are what? Our currency and the fact people want to live here. They want to do the business here. They want to be educated here. They want to invest here. But we're afraid to use that second one. We should be grabbing every smart person and bringing them into our society. Second thing doing is stop being afraid of AI. Stop being afraid of synthetic biology. We need the cures, and we need the labor substitution that AI and the automation will bring. And that's how you can at least stabilize productivity. There's a way you can make the math work, and Congress is light years away from adopting those policies because we're too busy engaging in today's anger type of politics of I'm resentful, therefore I want my pound of flesh, and screw the future. And trying to make public policy that saves our future is possible, but I think we only have a couple more years of on-ramp.
Well, that's I mean, it's sad and pathetic to hear to hear that, but the opportunity, it's like Ted Lasso. I smell opportunity here. I mean, because demographics, it's endemic to the Neil Howe story, or what we call the fourth turning, which sounds like you're well aware of, Congressman. The fourth turning is when a generation can't screw it up anymore, and the next generation has to pick up the pieces and start with the first turning and start all over again. So for you to start with those two things, the world's reserve currency and younger people with better ideas that actually care about the future, or me, I'm a Gen X, I'm 50 years old, I'm one of the oldest people at my firm. I'm not a baby boomer, and it's no offense to you or my dad. I mean, it's like, it's that both, and again, there's no evidence that supports that Trump's first administration, Biden's administration, Trump's current administration has any solution other than doing the definition of insanity, which is the same thing over and over again. Now, we can get into that, like in terms of what Bessent says, cost-free or whatever the hell they're saying. But to your point, like I like that intellectual fraud, because if math just, if you're starting to tell me that 1 + 1 = 8, I just won't believe you, especially if you're a baby boom, politician who's been bipartisan on this.
One of the reasons I've become much edgier, if not almost bordering on angry, there really are solutions. And one of the things I think is, forgive, because he's much smarter than I'll ever be, in Neil's fourth turning and those things, is it wasn't only a discussion of debt and not adopting, modernization, those things. We weren't really ready for, it's not population collapse, but pretty darn close, particularly for a lot of the economic driving countries. When South Korea functionally is going to have, it has just a remarkable collapse in its population. China is its own weird, the Chinese charts make no sense, but that's because of certain social and policies they've done over the years. But Taiwan, I mean, you think about when France has a higher fertility rate than the United States, even adjusted for their immigrant populations. There are solutions. But when was the last time you saw an idiot politician like me or people running for national office or those get up in front of audiences of people full of resentments and say, the reality is our demographics. The solution is possible, but it will be modernizing our immigration system, the adoption of technology, and forward thinking on if obesity is the single biggest cost in the US society. And I have really good data to show that. It's something you could take on in ag policy and nutrition policy and healthcare delivery policy. And you suddenly get a labor force participation number that comes up because people are able to come back into society and be productive. There is a whole palette of solutions. And almost none of my day will be actually talking about those. We will be chasing shiny objects so someone has some clickbait for their social media today.
Well, it's a hard thing. It's a hard thing for people to deal with, given that people by nature are political and polarized. But if you actually go generationally, you can see this in the election results. People that weren't Republicans, that are independents and Democrats, didn't vote for Trump. They voted for change, like just a shot at somebody telling the truth and changing things in a positive way, like evolving. But it's just, I wonder if the hardest part here, Congressman, is starting from a place of truth. I mean, Scott Bessent is a very thoughtful practitioner of markets. He understands what you said, the relationship between, hey, guess what? If bond yields are going down, that means we're not hitting the 3 arrows, 3% GDP target. That means the U.S. economy is slowing again. And again, your deficit's going to continue to rise. He understands these numbers, but we're still in the marketing phase of Trump. And to say things like cost-free or whatever, you would say that just is mathematically incorrect. I mean, to me, that's the hardest part, is that you can change who the administration was, but you're still starting from a point of lies.
Keith, I would actually ask you to expand the language even a bit broader. Let's pretend there's no one in the White House, because we often say, well, it's Trump policy or this and that. I would argue it's cultural and societal.
Yes.
If you and I right now said, hey, we're going to go out and we're going to go do a tour around the country, and we fill up a stadium full of people, of just hardworking Americans, and ask them saying, what's the primary driver of U.S. debt? How many are going to say, it's foreign aid? And you show the slide that foreign aid is like 5 days of borrowing. Hey, it's healthcare for illegals. And then you show that it's like, 26 hours of borrowing for an entire year. It's carried interest, and you show that that's 2 hours of borrowing for an entire year. What happens when the base of the society has either been so lied to so many times by the political class or the entertainment financial television that is more about dopamine hits than actual math? And then idiots like you and I get on something like this, and your audience is going to be the audience that actually gets this. Your audience is going to be the smart, thoughtful, educated. How do we tell the society that it's not necessarily even Republican or Democrat? We got old.
Yeah.
We have children now, and we got things where we put it on a credit card. So like even the tax extenders we're talking about right now, the vast majority of it we're talking about is saying, we're going to extend your tax cuts from 2017, yay, but we're going to put it on your own credit card. And no one seems willing to say that because it's disharmonious to what the public thinks they know.
Yeah, and what MSM does, we've only touched so far on the fiscal side. Let's, on the monetary policy side, of course, you have absolute bipartisanship on money printing, and again, money supply growth, devastation of the U.S. dollar's purchasing power for the American people. This has happened going back to Greenspan. So, you really have this, it's not just the credit card. It's like, okay, we live on the credit card. If the economy slows, can you cut the rate again? And that's going to make the whole thing get worse faster. So we're kind of actually on the cusp of this. The stock market's starting to break down. The economy's slowing here in the first quarter. And whether, Scott Bessent and Donald Trump like that math or not, that is definitely not additive to the forward outlook on the deficit. And if the solution is what the bond market's starting to price in, like you're one of the few guys that talks about the 10-year bond yield, but it's going straight down. That's the message. You don't even have to be a markets person to see the formation. That is telling you the economy's slowing and that the market's betting that the Federal Reserve is going to come out with their only playbook, which is more cowbell.
But more cowbell, but will it help us on the longer, on the longer end of the curve?
No, I mean, it's not. That's why we're at where we're at. It was always a solution for both parties and throughout this entire demographic slowdown.
And Keith, as just culturally, education-wise, I'm more of a capital stack theory person. How much capital actually exists in the world to finance governments that all around the world are binging on debt? And there becomes this argument saying, well, will interest rates go up? Well, that's what a normal supply-demand curve would be, unless because of that shortage of capital stack, you don't get productivity growth, you don't have a demand for it, interest rates come down, but that also means tax receipts start to collapse around the world. But either side of that seesaw, whether you're a person that believes interest rates going up or you believe tax receipts are going to collapse with interest rates going down, you're still in the same place. You don't have cash to pay for things. So now do you do the classic inflate your way out, devalue the US currency? The structural problem of most Western societies is most of our entitlements are inflation adjusted. So Social Security check gets the COLA, Medicare gets certain adjusters, and it makes it very hard to inflate away your debt stack. And now we're trying to do a small experiment with a couple of my economists. As you know, I chair the Joint Economic Committee. So I'm blessed with a handful of guys with PhDs. And we're doing an experiment saying, okay,
I could save you some money on that.
Yeah, well, 10 years from now, how much of the population is of a certain age? Okay, so we know we're heading towards 22, 23% of the population being 65 and up in the United States in 10 years. How much of that population was the holder of investment capital, of lendable capital? And how much of that will be being pulled back out of the market because they needed to live on? They needed to pay for their, their retirement years. And we're trying to get a sense of what the future capital stack actually looks like. So you have this continuing skyrocketing of debt growth. In our theory, we're trying to model it. We're not there yet. Is what's the available capital from the entire world? When you look at some of these other societies that have very high savings rates that are also getting very old, very fast, much more than even the United States.
I mean, you mentioned South Korea. I mean, Squid Games Part 2 is a real life thing in South Korea. I mean, that's life. I mean, it sucks. I mean, it's such a dire situation when you hit that demographic point and go to the point of no return. Again, South Korean central bank, educated here in the West. Oh, we're going to cut interest rates. We're going to stimulate, expand the debt, expand the deficit. They're all doing the same thing, Congressman, because there is no other playbook other than that playbook for the baby boom generation. This is an entire, you mentioned PhDs. I mean, there's an entire generation of government employed economists, PhDs, et cetera, that all subscribe to the same, categorical, this should be a cleaner conversation, but bullshit. This is not actually the way that the world works. It's a nonlinear, complex system that constantly surprises the government, in particular the Federal Reserve, to the downside and the upside at this point, on inflation in particular. And no matter where you go, you can't really trust them at all being at the switch in terms of the next policy moves. So markets have figured that out.
Keith, besides having great hair, you nailed it. I thought you'd find that funny. But so we've been actually trying to sell a concept of how do you get any separation from this gravity that's pulling you back down?
Yeah.
And that's, look, the debt and demographics and the fact that interest rate policy, liquidity policy isn't going to save us. And we do see a crazy potential path. And I almost have to accept that the political class is not intellectually robust enough to absorb it, is if you would adopt technology at just a rapid rate, use the synthetic biology and these things coming to cure a number of diseases, take on chronic conditions like obesity and those, could you get enough speed and movement to at least create some stability? And we've actually played with the math. It's possible, but I'm not sure it's intellectually, politically, the current system is capable of thinking disruptively like that.
Yeah, agreed.
When people are losing their minds because there's data scientists going up and down government ledgers finding perversities and misallocations of capital, and that's worth protesting against. And then you show them saying, you do realize everything has been basically found in those, and some of them are horrible spending, but it's only like 4 days of borrowing. When you're borrowing about $6 billion a day, there's just this misunderstanding of the scale of the problem, but also solutions are not going to be these little tiny incremental things. There has to be a rethinking of markets, allowing them to disrupt. And God knows incumbent businesses, incumbent bureaucracies despise disruption.
Yeah, especially when it's highly disruptive when the market figures you out, right? I mean, in as much as people don't understand that rising bond yields is a sign of a healthy economy, some people try to spin it in different ways. But when the economy is accelerating, bond yields go up. When the economy is decelerating, you get what you see today, which is the market's starting to believe what we've already discussed, that this is not ending like rainbows and puppy dogs with cost-free type things. So I still come back to that. What, like, your solution, I've had Vivek Ramaswamy on the same real conversation. I mean, if he was sitting in the seat, he would go immediately to the wood on what you just said. He's highly intellectual when it comes to the healthcare system and what the potential opportunities are and fixes are. But he's like now going to go run for the governor of Ohio. I mean, I think to me it looks like it's more important to maintain a narrative than to actually solve for some mathematical equations. Do you agree with that?
Back to my previous theory. What drives public policy? Is it the public? Or is it the the elected class? Glad you caught that. But it's that sort of what comes first? Is it culture or politics? And what happens when you have a society that feels crushed, and inflation was just crushing to people across America, but that resentment is creating policy of more government, more difficulty of economic growth. When you actually have people in the administration saying they don't want automation because of its threat to jobs, and idiots like me saying, but if you don't have that remarkable automation cycle, you can't have the productivity step-ups to actually create a wealth effect to stabilize. And so in many ways, you're making the point, there's a way to survive this. But you can't keep doing the same thing. And that's all we're doing, is we're just going to tread water. We're going to pretend, and we're going to stack up more and more debt on top of the stack that's already exploded.
Yeah, that's Josh. What would be your follow-up questions or topics you want to get into on that?
I think at a very high level, and maybe this is a very difficult question to answer, because it sounds like your head's in the right place and certainly your heart's in the right place. But are we on this, this sort of collision course with destiny, to kind of revisit Neil Howe's framework, where there's just no real way outside of a crisis, that we're ultimately, there's people who know what needs to be done, but this lack of willingness to actually do it. I look at just even this current, round of tax cuts and whatnot, and, there's a few voices out there who are, trying to, I guess, do the right thing longer term, but it just seems, that the cards are so stacked against them. You can't, with such a narrow majority, it's just so difficult to stand in the way of this, big, beautiful bill that, it seems kind of, inevitable that we're not going to be able to fix this until a real crisis basically, forces the hand of Congress. And we've seen that in the past too, right? Financial crisis, other sort of moments in time when all of a sudden everybody just sort of wakes up from their dream to reality, and it's like, oh, we have to actually do something here. What do you think about all that?
Yes. Josh, you're correct. The one punchline you missed is when there's those moments of punctuated equilibrium. If we remember our high school economics class, when boom, everything we knew is wrong. The playbook no longer really works. The playbook is, okay, loosen monetary supply, have the Federal Reserve, now buy MBS and CMBS. I mean, somehow, try to create extraordinary liquidity. And then in the future, the wealth effects of those of us who have assets, we get wealthier. The mainstream of the society actually gets poorer because we've inflated away, their savings. And what breaks my heart is I'm less of a collapse theorist. I'm more of a slow rot theorist. That, and I can make you the argument that's actually in some ways more societal devastating, because it builds on itself and builds on itself over time. You end up with a greater split in society, higher levels of resentment, and you basically get an entire society of rent seekers trying to use government to patch up what's gone wrong in their lives. But back to our theory. We're right now doing a reconciliation budget. That is a moment that those of us on the more free market, Republican economic side, we do it so we can get through the 60 vote filibuster. We can do just 51 votes in the Senate. That's why we do this whole dance. Yet you just saw that reconciliation budget sell out. Instead of trying to find ways to pay for the extensions, we decided, here's what we're going to do. We're going to extend your tax cuts, but we're going to put it on your own credit card. That's functionally what we're doing. And yet, if you listen to so many of the leadership, they just say, oh, just borrow it. When you hear someone say, continue current policy, what they're saying is just borrow it. Don't make us do hard things of cleaning up the way we deliver services. Every dime a member of Congress votes on is borrowed. The only time you get to vote on something that actually is really substantial for the future is during a reconciliation, where you actually get to look at how we deliver mandatory spending, earned benefits. And we try to use examples, and I know I'm rambling, but I'm trying to give examples. In Medicare, we're trying to do an analysis right now of how many duplicative MRIs, X-rays, ultrasounds there are. We have one study, it looks like it could be $25 billion a year. If you said, hey, once you get your MRI, you attach it to the person's phone, it's portable with them, is that a cut in services? But it's, $250 billion over 10 years. Is that just a modernization? Yet there's an army of lobbyists outside in my hallway trying to stop things like that, because that duplicative nature of those scans is their profit model.
Yeah. It's, in addition to demographics, just watch how they get paid. I mean, that's pretty much, that'll get you to the, to the heart of the problem. I mean, that's the self-interest of society. That's where we're at. I mean, if you're already long past the point of no return, to Josh's point, and it's going to end either abruptly or, to your point, in rot. I guess that's my next question is, I mean, in rot actually would fit with the demographic curve, right? Because demographics are just time and space. If you piss people off long enough, I mean, if this election didn't change anything from a debt and deficit perspective, well, then time and space says 4 years from now, there's probably going to be a Gen X president or a millennial president. And you finally get to a different generation, maybe trying to undo the rot. It would be actually right on time with the first turning, which again is Neil Howe's been uncannily accurate on this. But bring it back to the numbers that you mentioned.
Turning, doesn't it?
Yeah, it's crazy. But bring it back to the numbers on the tax cuts versus the fantasy island kind of balancing or cost-freeness of it all. Guys, go to slide 98. So we just show this tax cuts. Again, Congressman Schweikert said it multiple times, but this is going to, if you just look at it on the right side, it's going to explode the debt. So we're showing you, once again, tax cuts and doing things like, cutting tax breaks for guys that own sports teams or stadiums. To Congressman's point, these things don't turn the dial. If you go to the next slide, which is this is the real one. I mean, this is Josh Steiner's slide here. Which again, the tax cuts have this on the right, the left chart there on the right side has this thing called the dynamic feedback estimate, right? I mean, the Yale budget's at 15, Penn's at 177, CBO's at minus 60. That is at plus 3 trillion. I mean, it's crazy. So there aren't, to your point, we're just idiots having a conversation. But at least we have numbers. I mean, the numbers that are the most idiotic are the ones that they're making up.
Yep. But as long as the politician can get in front of his audience and say, I'm going to, extend this. Look, I fully support extending current tax policy for, so the hardworking middle, particularly when you consider the offset of inflation. But I'm also intellectually committed to saying I can find ways to pay for it.
Yes, exactly. Huge difference.
And my part of my fear is I think the market, bond traders are really smart people. They're mentally prepared for a couple $1 trillion of new U.S. debt coming to market each year for the next decade. What I don't think they're prepared is for that suddenly to become 2.7 or 3 trillion in a year, because we are competing with a lot of other countries for that capital. Exactly. And one of the reasons you also see in some of the CBO calculations of costs is there is a cost to when money goes to finance U.S. debt, that is cash that doesn't go to build that new factory, that new piece of equipment, those things. It's the whole capital stack concept. And just financing the demographics of the world, of the industrialized world, our theory is going to be consuming so much capital that the money that's needed to create the next level of productive capacity is going to become much more scarce.
Very good point. Josh, you get the last question.
I guess I would end with, where do you think we end up with this tax package? Do we sort of go down this road that, there's no cost to the tax piece? Do we end up layering on a lot of other things, not taxing tips, not taxing Social Security, not taxing overtime? And, there was a whole laundry list of sort of wish list items there. And then what ultimately, since nobody seems to want to cut any spending, do we end up with a number that's just much bigger than, what anybody's sort of thinking at the moment? Is that the most probabilistic outcome in your mind?
It is my fear, because that's the path of least resistance, is, everything is cotton candy with no calories. What some of us have been surprised with is how little the capital markets, the business executives, the banking executives have been pushing back. When Ray Dalio is one of the few people making a splash on, look, the debt is going to start to have an extraordinary headwind. I can't give you a brilliant answer. All I can tell you is a month ago, we were going to try to offset the majority of the tax extenders. Today, we're only going to try to offset about 20% of it. That seems to be a pattern around here.
Mm-hmm. Yeah, and a pattern that this isn't a fractal pattern. This is like a human error, which is very different. The world, again, the contours of an ocean line, the edges of a leaf, they're all determined by the fractal nature of the universe and all these nonlinear things. That might sound like a little less idiotic, but it's certainly less dumb than assuming that you can have human error on this order from both parties and continue to make the same error over and over again. So thank you. I think many people, I'm thanking you on the behalf of the entire audience and many people, Congressman, that to just even have this conversation. It's not like we haven't invited other people. I just don't think that they have the courage and or the stance on this to get on our channel and have the real conversation. So thank you very much.
Thank you. Josh, take care.
Thank you, Congressman.
All right, now that is my first real conversation with a congressman. If you're a congressman or a senator and you'd like to get on the blower here, we'll be happy to do that. We will hold you to account. We will use real numbers. We're not part of the elites. Do I look elite? No, we're not part of the establishment. We're just math guys, and we're trying to be less idiotic about all this than the U.S. government has been for many years. Thanks for joining us.